If we take a look at the current market since the report was published, the market came up to basically test the high of the 28.35 on the 26th, and we pretty much have experienced a lot of resistance up here. As you can see, we have a bit of a trend line resistance, and this is a bit of a down flag formation that's taken place, which I'll explain to you is actually very bullish for the market. Once the market breaks out of this resistance level here, which is 28.29, even though the VC PMI is indicating that there is supply up here, it would be a bullish breakout. Let me come back here for a minute and explain to you the components of the VC PMI. The VC PMI is an algorithm that identifies for you the levels of supply and demand for the following trading day. And what we have seen here basically is the market coming down to the 27.89 level here, the buy one level here, that's been trading pretty much all through the week since the 24, the 25, and right after the report. This was the level that it was anticipating that we want to take a look at buying into these corrections. The daily blue levels here that you see represent major levels of support, or where the algorithm identifies the level of demand. And you can see here that after touching the high of 28.66, which we anticipated, or the VC PMI anticipated, the market reverted back down to the mean and right into that B2 level. The B1 level is a 90% probability of a reversion to occur back up to the mean and possibly at the extreme above the mean, which is the sell one level. And as you can see here, the market reverted back. It tested this level of demand. It absorbed all of the supply that was given at this price. It took out all of the supply and reverted back up to the mean, met the target, which was 28.11, and exceeded that trend all the way up to the sell one level of 28.29, which were established on the 26th at about 7:30 a.m. What we teach you here at the Equity Management Academy is how to identify the trigger points. When the market comes down to the buy one level, how do you identify the trigger point? And we teach you a very specific methodology that identifies for you, first of all, the average price every day. The average price is 50-50 standard deviation. And what we teach you is basically to trade the relative implied volatility extremes away from the mean or the average price. And that would be the buy one level or the sell one level. Either one of these levels, when the price reaches here, has a 90% on the sell one level, it's 90% probability the reversion will occur. Most of the time, the market will revert back from that buy one level, as you can see here. And it will revert back down from the sell one level, as you can see here, right back down to the mean. When the price reaches the level, we go neutral. Then we wait for the price to close above that level using the 15-minute bar. When it closes above that bar, it activates the trigger above as a target, and it uses the level below as your stop. And so You can see that using a bit of an error, a margin of error, roughly maybe 5–10%, that you would have been able to capture this by signals here. The first time the bar touches the price, basically, it's a setup. And the second close, using the 15-minute bar on the close above, activates a buy trigger point. When you go long, and in this case at 27.98.75, your stop automatically is 27.89.50 on a closing basis. Your target, your first target, is the level above or the mean of 28.11. Took profits here. I suggest don't trade around the mean because it's pretty choppy until the market either goes above the mean, and in this case it got up to sell one level of 28.29 on the 26th at 7 a.m. and we went neutral, liquidated. And we tell you when it gets up to supply in red, sell 1 and sell 2, you do not buy between sell 1 and sell 2. Why? Because selling from sell 1 is a 90% probability of the reversion to occur. If you buy from sell 1, you're buying only with a 10% probability. That's a very weak trade. This identifies for you the extremes above with a very specific price that takes into account Gann, Fibonacci, wave, and Vedic mathematics that identifies for you the extreme above the mean or below the mean. As you can see here, the market reverted back down to the mean, took profits here, went back up above, activated a target here, it reverted right back down again, back up again into that sell 1. So you can see the relationship of the price to these numbers is extremely, extremely close until the market, which is why I say only take positions from sell 1, and in this case the 28.29 was a short all the way down to the mean. You go neutral, you wait for the price to come down below the mean. If it touches the B2 level, which is the 27.89 at 27.89.50 for this week, as you can see, you would have activated a buy signal with a target of the mean, 28.11. Go neutral again. You do nothing. Basically, right now, we are in a neutral position in the futures markets, waiting for the market either to go to the extreme above the mean, which almost did today by making a high of 28.24, not quite to 28.29, or for the market to come down to 27.89. So the strategy that we teach you is a very methodical strategy. How do we identify the B1 and B2 levels? Every day, these levels are supply and demand levels. They're calculated. These are pivot points, which include Fibonacci retracement, Fibonacci numbers, Fibonacci sequences, all embedded into the algorithm. And the algorithm basically is completely automated in the TradeStation platform. If you're interested in automation, we'll be glad to give you a trial for you to see the program completely automated in the TradeStation platform. What we're teaching you here is basically the artificial intelligence that makes up the automated algorithm, and we teach self-directed traders how to apply the intelligence, and prepare before the automation executes it. So it kind of puts you into a bit of an edge, so to speak, in that you know what the robot is going to execute the following day. And so these are daily criteria, daily proprietary levels that we use that are available on the TradeStation platform that basically are calculated daily. Now, one of the things that we do here is basically you have access to the automation here in TradeStation, and these levels here are calculated, as I said, daily, automated, completely automated. But we teach you on a self-directed basis here in the tutorial room how to use this for self-directed traders. The automated results, if we take a look at, for example, just the back testing of the automation here for the E-mini, the results are pretty impressive. Let me see. And this is just completely automated. Using one contract, it's producing about an average return, 30-40% average return in completely automated. But that is completely automated. If you want to discuss automation, please feel free to let me know, and I'll be more than glad to give you a trial. What we teach you here, once again in the room, is the application of the automation and what they mean basically, and how you identify the signals, how you identify the trigger points in executing the highest probability levels here in using the VC PMI automated algorithm. Any questions? Any questions so far? Are there any questions at all? If we take a look at the weekly data for the mini S&P, you can clearly see where the levels of demand are in blue, which is what we identify for self-directed individuals. And you can see here that the market, after coming down to test the low of pretty much 2789.50 on the 25th, it rallied back up to test the 2835 level of the mean. 2827 came down below, came back down again to test the buy one level of 2791.75 now on the low, not quite coming down to that 2789 and making basically a higher high. And this is what the market has been doing here, is making a higher high. The market reverted here on the 8th of March from a low of 2753 on March the 8th. And that's been pretty much the average for the month, 2760. And the market made a new high, came down here, and it's making a higher high. And so there is a very high probability, possibly if we close above the 2850 area, that we could challenge the highs of 2888 to 2961, which are the highs that we made on 921. It's a pretty strong uptrend, and the market is making higher lows and higher highs. Nick, you can use the indicator, for example, to time entry points of swing duration, for example. And that's, for example, here at these levels here, when you see corrections of this magnitude that come right into a major area of support, these are the levels that are recommended to take, call positions, basically. In fact, I am taking call positions for May, and I'm using the SPXS as an instrument of choice, SPXL, excuse me, as an instrument of choice to take up long positions here. So I'm buying the 45 calls because because we're up here, pretty high up. We've gone up, since December, and if you missed this move here, we pretty much almost doubled that since December, and so it's pretty risky up here. It's a little bit overbought, but it can get more overbought all the way up to maybe the 50 area before this is completed. So I think we still have some room to the upside. And you can see here, if you buy the 45 calls, roughly paying about, I don't know, $300 in that vicinity, you can hold on to it for May 17, and you can buy the 46, 47, and 48 calls and just hold on to them all the way till May. So timing the entry points like we are basically are a good timing tool for you to begin to build a position with limited risk. So this is a good time to be buying calls. In fact, as I said, this is what I've been buying here this morning. And we've been buying the May 17 SPXL 45 46 calls. Any more questions? Stapleton is asking May 17 SPXL 4546 calls. The ones that I have here right now, for example, that you look at is the daily numbers that are changed every day and we post every day. And they're available, by the way, on the website here every day. Let me take a minute here and show you the process that we or our subscribers basically go through here. If I may just show you. When you subscribe, you get a password to the website, and you come here to the member login page, and you put your password in here. This allows you to enter and obtain your subscription daily. There's two subscriptions, a daily, a standard daily, and a standard premium. The standard has about 11 algorithms that we trade, which include metals, energies, indices, ETFs, and cryptos. The premium subscription has about 27 different algorithms in various categories, a little more expansive in stocks and cryptos, as well as currencies. What we do here by choice is we trade the indices for a couple of reasons: liquidity, volume, and we use the VC PMI that you see here basically to execute daily signals. And we also post weekly signals, which uses weekly criteria every Saturday for the same markets. And we do that 4 times a week. Once a month, we publish the monthly algorithms for the same products, for the same markets. And so we give you access and prepare you prospectively with daily, weekly, and monthly information. As you can see here, in addition to the spreadsheets, we also provide a report that is a little more in detail that you can see. For example, you can read as we came into this week, and this is this was the weekly indicator. The market closed at 28.10 on Friday. The market closing above the 9-day moving average of 28.63. It's confirmation the trend is bullish. This is the first filter that we use. The second filter is the VCPMI, the mean, and in this case, closing below 28.27 activated a bearish sentiment, and it told you to buy at 27.89 right here. This was published last Saturday. Buy 27.89 to 27.65, and this is what I'm noticing here, that with the market coming down to that 27.89, you know, the first time was on the 25th, and then it came down. It tested again almost on the 27th. It seems that this area is a major area of support, offering demand at higher levels. And this is what the algorithm has been able to identify. But coming back to you giving you access to this information, you have the weekly, and also you have access to the monthly information on the spreadsheets, as well as the summary reports, as well as basically we use this room. This is the elite room, by the way. This is where all of my traders come to trade every day along with me. We execute the VCPMI live, and I prepare you here the night before, and I show you pretty much everything I'm doing, everything I'm trading, and we also share what other people are doing in here. I start by giving you the VCPMI for the following day, and as we come into the room, basically, I give you commentaries. Market trading below the mean of 28.10 activates the buy one level of 27.89 to 27.70 day or night. So you're prepared. The market was closed at about 2,800 at this point. So I prepare you for when the market comes down, how it activates these levels. And I also show you what I do, and I do options. I execute them right here. Right or wrong, I post all of my trades in this room: futures, derivatives, options, and make additional comments here. You know, as the market throughout the day is trading the VCPMI. So this is a real special room that is by invitation only, where essentially traders that come into this room, you know, we sometimes make $2,000 or $3,000 a day, and we also lose, but the overall return so far in this room since the beginning of the year is about $34,000. And that's pretty much trading the VCPMI, executing the VCPMI in instruments that we use, such as securities. We use futures, and also options, basically. So it is a very flexible instrument that can be used in a very, very flexible way. What I want to do is here is just take a little picture of what we have done so far in the room. And I think what we're looking at as of today is it's about $34,000 profit in trading the mini. We just started trading the June contract here, so but so far it's about 34,000 that we netted here in the room. And so if you come into the room and you watch what I do, if you're a self-directed individual, you can follow this signals and you can execute it on behalf of your account. I prepare you in the same way that I prepare myself when we come to the trading room. And so coming back here, let me take a look at the weekly numbers here that we have. These are the weekly numbers that we're trading, and you can see here, even on the weekly, we've come down to 27.8950, and it's been the whole week a level of major support, a major buying opportunity, right into the mean, and allowed you to trade 30 points, 35 points, on a swing. Where we're going right now, I believe this is clearly stated here that there's a lot of demand in here, and we're possibly looking for the price to close above 28.27. Closing above 28.27 is going to activate the 28.49 to 28.88. I'm using a $10,000 account for TradeStation using only one contract. Okay. If you're methodical about using one contract at a time and don't change the denomination, you're going to be consistently making profits and building the equity to a point where once you have a certain amount of profit built in, you can do two contracts, but do it systematically. If you're trading the signal with options, you can be a little more flexible. You can use multiples. But I think $10,000 is a reasonable amount. I use the platform, by the way. Let me again tell you that you get this information the night before. When you come to the website, you get access to the passwords. You get all of this information the night before, and so you are prepared, to trade with this information the night before. You have access to the trading room. You have access to the daily signals the night before. I publish the signals by about I would say about 9 o'clock Pacific time. They're all posted, but I make a point of sharing the preliminary, you might say, numbers in the chat room right here every night around 3 or 4 o'clock in the afternoon. So you get your signals in different ways. You have access to the website to get the spreadsheets. You basically have access to the chat room here. You also have access to the tutorial room, which is what what I'm using here to do this webinar. And in here, obviously, I use myself. This is the Think or Swim platform that I use to execute the signals live, and I show you basically how I'm executing the signals live.